Hello everyone, welcome to another lesson from Lesson Up Squad. Today we'll be doing one of the most awaited topics that I've received a request for, which is VAT. So let's get going. So today we'll be learning how does VAT originate, so how does it all come about, some basics of VAT, some exemptions of VAT, what is VAT inclusive versus VAT exclusive, input VAT versus output VAT, and how to calculate VAT payable or receivable, and also deal with a question relating to ethics and fraud. So how does VAT originate? Now, I know VAT always seems like one confusing topic, but it's so important to understand how VAT originates so that you don't have to force yourself to learn things off by heart, like whether VAT is supposed to be an input and output. So it's very important that you understand how does VAT come about so that you may know how to actually deal with it in the question. So VAT is basically a tax that you pay on shopping, on non-essential shopping. So those of you that are shopaholic, yes, you are paying more VAT than those people that are not shopaholic. So you pay VAT on anything that is non-essential usually, right? So that's just an easy way for you to remember how VAT comes about when you are shopping. So if you've ever looked at a receipt from a grocery, or if you've bought a pair of shoes or just a pair of jeans, you would notice on your slip that there's an actual amount called VAT on that slip. So that's the amount of tax you've paid for actually purchasing that item. So let us go into deeper understanding of how does VAT originate. So here I've used an example of person A. So let's say, for instance, person A has a motor spares company. Their turnover exceeds the threshold, which means their sales reaches a certain amount, and therefore they are required by law to register for VAT. So now they've registered for VAT. Right, so say person A has purchased parts for 50,000 Rand, they pay VAT on it of 7,500 Rand, so they got to the counter, purchased all their parts, and they then paid 67,500. So that's the total value that was paid by this particular person. Right, so here you can see that this person has paid VAT of 7,500, and you can see that he's now when he went to the counter, he paid the amount including VAT. So you can never get to the counter and choose not to pay VAT. You have to pay VAT as it's part of the total price. So this person got to the counter and paid 7,500 of VAT, including the cost price that he had to pay for his merchandise, which was the spares. Then person B is in the manufacturing company. He is also registered for VAT. Now he purchased these vehicle parts from person A and he paid 80,000 Rand. Now he paid 80,000 Rand for the product and he paid VAT on the 80,000 Rand. Now remember, VAT is always paid on the sales value. So he paid a total of 92,000 Rand. As a result, person A actually initially when he bought the items paid 7,500 Rand VAT, and when he sold the items he received 12,000 Rand VAT. And as a result, he now has to pay SARS a sum of money. Back to person B. Person B paid the VAT of 12,000. He then went on to sell the vehicle for 100,000 and he charged 15,000 Rand. So then he received a total of 115,000 Rand, including 15,000 Rand for VAT, right? So remember, he paid 12,000 Rand to person A. He received 15,000 Rand for selling it to somebody else, which gave him a total difference of 3,000 Rand VAT that he still needs to pay SARS. So this will carry on, right? You can see the chain carries on. One person charges the VAT and then pays the VAT when he receives it, when he sells the VAT, right? When he sells the product. So that's how the cycle of VAT continues. You will see that the last person in the chain, which is usually people like you and me, which are people that buy the end product, people that don't have the company to register VAT. I cannot as an individual claim VAT, therefore I will be the person who ends up taking the burden of the VAT, because person B, although he paid for the VAT, he claimed the VAT from me and now he will pay that VAT over to SARS. It's important to know that for business, VAT is not an additional expense, it's a liability. VAT is collected on the behalf of SARS from us and then it is paid over to SARS. Okay, so now remember that VAT, and I have spoken about this in the previous slide, is not an expense. it's charged on behalf of SARS, right? So as you can see in the previous example, the VAT got passed on from one person to person B and eventually to the last person who bought the vehicle, and he ended up paying VAT, and he could not claim VAT because he's a person like you and me and not a company. Had it been a company who purchased that vehicle, they would have also claimed VAT and also paid the VAT, and eventually when another customer would have purchased the vehicle from them, they would have actually not been able to claim the VAT. So now you can see that once you're registered as a VAT vendor, you can claim VAT and you can pay VAT. So when you register as a VAT vendor, you do not have the choice of not paying or only claiming. You have to do both. Both go hand in hand. So you have to claim VAT and you have to pay VAT. And that gives us the rise of the concept of input VAT and output VAT. Currently in South Africa, the rate of VAT is being 15%, which you guys may have known. That has recently changed, I think 2 years ago or so. So we used to pay 14%, now we pay 15%, which is your standard rate of VAT. There are also items that you will see that when you especially purchase groceries, some are zero rated item, which basically means these are items which the government can at some point in the future decide to change the rate and charge a certain amount of VAT on these items. So 0% items usually on your slip are like your brown breads, your essential items, even fruit and veg, eggs, and those sort of things. But now if you talk about, say, fancy stuff, if you're purchasing a pair of jeans, you're definitely paying 15% VAT on that. You then have a third category of VAT, which is your exempted VAT. These are certain items that the government has said there will not be any VAT on this. I will take you through some of the examples and explain you why that happens. Also remember, there's a very important requirement. If you're a business and you are registered for VAT, it's not always easy to claim for VAT. So if you want to claim your VAT from SARS, you need to have a valid tax invoice. If it is not a valid tax invoice as per SARS, you will not be able to claim VAT, but you will be liable to pay all the VAT. So make sure that you are aware that a correct tax invoice is present when you are claiming your VAT. Okay, so there are some things that the government has exempted from VAT, and that is usually for the reason of helping people and helping certain things to become more affordable. Say, for example, education. So education has no VAT on it, and the reason is that your school fees can't have VAT on it because it places excessive burden on parents paying the fees to be able to afford those fees. Therefore, there is no VAT on education services. Likewise for bus, train, and taxi passenger fares, this is known as a very, very basic commodity. People need to use the bus, train, and taxi to get to work. So therefore, to help people, the government has implemented an exemption of VAT on these services. You've also got your financial services, and that is to purely encourage people to be able to save. Another interesting one is renting of accommodation for a private home. So obviously, as it is, rent is a very increasing expense, and therefore the government, to help the people, the common people, will ensure that there's no VAT on normal housing, as well as on salaries and hobbies, private sale of personal or domestic items, and the supply of goods and services by welfare organization. These are just some of the list of exemptions. You may receive a trick question in the exams regarding that, so please make sure you know these things. They're not much to learn, so you can surely learn them and understand why they're exempt, and that should help you remember. Okay, so let us quickly now talk about what it means when we say VAT inclusive and VAT exclusive. So VAT inclusive means that the amount that you are seeing there includes VAT, whereas VAT exclusive, on the other hand, means the amount that you are indicated right there does not include VAT, and you have to add VAT. By law in South Africa, all prices must include VAT. So even if you see a price excluding VAT, they need to still indicate to you a price including VAT. In some countries, that's not a requirement. So what usually happens in that case is they see a different price from the price that they're actually going to pay at the counter. So I just quickly wanted to show you maybe a cool trick, if that's what you would want to call it. You can see that including VAT, right? So if you're asked to calculate an amount including VAT, How do you know whether to multiply it by 115, whether to divide it by 115 or divide it by 100? And it confuses, and most of you try and learn the formula of by heart, and that causes total chaos when it comes to your exam, because now you've learned over 50 formulas and you can't remember each one of them. It is not practical to do that. Therefore, you always opt to understand something so that you may be able to apply it easily in the exam. Okay, so number one, always remember your amount, your raw amount is always 100%, right? So the amount, the amount as it is 100%. So that's the amount excluding VAT. The amount that you actually want to sell something for without VAT implication is 100%. So if an amount includes VAT, it is no longer 100%. Because you added VAT on it, it's 115%, which is your VAT rate. Therefore, your value is more than 100% because you've already added the VAT. It is VAT inclusive, including VAT. So therefore, when you want to calculate your amount of VAT from an amount that is VAT inclusive, you would use your amount multiplied by 15, because that's what you're looking for, over what do you have? You have an amount including VAT. Therefore, you would use 115 because that's including VAT. So it's always what you want over what you have. I want 15% VAT from my total amount. What do I have? I have an amount including VAT. Very similar. If you're doing VAT exclusive, I would use the amount. What do I want? I want 15% over what do I have? I only have 100% because the VAT was not added in this example. Therefore, I would use 15 over 100. I hope this helps to clarify it now. Now let's quickly briefly talk about input versus output. So input VAT is VAT that you actually claim from SARS, and that happens only when you purchase. So when you go to a counter and you've purchased a pair of jeans, you will see that you've actually paid an amount including VAT. Now you've paid 10 Rand VAT on the pair of jeans that you've purchased. You would now be able to claim that VAT from SARS if you were a business and this pair of jeans was for your business purposes, if you were to buy and sell this jean to somebody else. But obviously, because you're an individual and you don't have the company, you would actually now take the cost for yourself and not be able to claim further from SARS. Just like that, output VAT is VAT that you pay to SARS and only happens when you sell the product. So when you sell a product to somebody else, you will see you have charged them VAT. Because you charged them VAT, you have to pay the VAT on behalf of them to SARS. Okay, so let us now look at for the question of the day. Usually a VAT question can be 10 to 15 marks, and you can be negatively marked very easily in this question if you do not know your input VAT and output VAT. So don't take your chances of putting anything as input or output unless you're sure about it, right? Also, it's about 10 to 15 marks in the exam, so which is usually very achievable. So make sure you can get these easy marks. Okay, some of the most important things I've always highlighted on my question, which is your VAT period, 31st July 2017. So VAT period usually isn't going to make or break your question, unlike your financial statement questions, but I usually still keep that at the back of my mind. You will also see, because this question example comes from a 2018 exam, we've got 14% VAT. Remember, it doesn't matter what the rate currently is. More important is to understand the concept so that you may understand how to approach the question. Now, your first question here deals with whether it is a receivable or payable to SARS. That's a very common question regarding VAT. You will most likely always be asked to calculate whether you're receiving or paying the VAT to SARS. Addition to that question, another common question is your ethical question regarding whether it is right or wrong to do something when it comes to VAT, and we'll go into detail into this question a little later on the slides. Okay, so I just wanted to say quickly, when you have a receivable, so how does a receivable come about from SARS? So that means where you actually paid more money to SARS than you claim. So that means you actually purchased so much inventory, you may have had to pay all this money to SARS, but you didn't sell as much, therefore you couldn't claim a lot from SARS, and therefore because you paid way more than you sold, SARS will pay you back. Payable, on the other hand, is when you actually paid SARS less than what you claimed, and therefore that would actually mean that you now need to pay SARS. So let us now start looking at the question. Okay, so first thing, when you look at a question like this, you can see you've got a balance of 27,200. Please don't forget about this balance. Part B tells you amounts from the journal, and it indicates to you amounts excluding VAT, VAT amount including VAT. Now, very important, when you're dealing with a question of VAT, you need to have the VAT amounts. You can't be using any other amounts from excluding VAT or including VAT to do your actual calculation for VAT, what is payable to SARS, because SARS is only worried about these VAT amounts. You can see you have a question mark, so that obviously without goes to say that you have to calculate these amounts. Number C also says the following transactions were not taken into account, and it gives you the two transactions. So very important, before you submit something to SARS, all the things for the period, for your VAT period, need to be accounted before you can pay or receive money from SARS. So you have to make sure that you've actually recorded everything before you actually submit documentation to SARS for receiving or payment to SARS. So now let us quickly look at the first amount. Right here you've got your stock that is returned by debtors. You will see that your stock that is returned by debtors, you've got a value excluding VAT, and then you've got a value including VAT, and you're expected to calculate a VAT amount. So the easiest way to do this, right, in this case where you've got both your VAT excluding and your VAT including amount. Now that you have to determine your VAT amount, and if you're not sure whether to multiply it by 14 over 100 or by 14 over 114, what you can do is say including VAT minus your excluding VAT, which will give you your VAT amount of 2,100. In that way, you've determined your accurate amount of VAT. But now you will see in your second example, your bad debts, here you are missing your excluding VAT and your VAT amount. So you can't use the approach that we used previously to calculate VAT. But that does not mean that it's impossible to calculate VAT or has to be confusing. Here you can see that it's bad debts. So here when you have bad debts is, what is bad debts, right? So bad debts is basically you sold to a debtor and now he's no longer going to pay back. So now should you use 14 over 100 or 14 over 114? You need to use 14 because that's the VAT amount that you're looking for. That's what you want. What do you have? Do you have an amount including VAT or excluding VAT? So 34,000 Rand, is that including VAT or excluding VAT? 34,200, sorry guys. And to determine that, all you have to do is think logically. So when you sold your debtors, would you have sold the goods including VAT or excluding VAT? You always sell your goods including VAT. So when you sell it to somebody, by law you have to charge them VAT, therefore the amount had to be including VAT, and you would use 34,200 times, what do you want? The VAT amount, which is your 14%. What do you have? You have an amount including VAT, and that gives you your 4,200. Okay. C, stock taken by the owner, cost price was 9,000 excluding VAT. So in this case, they actually told you VAT was excluded. So that's pretty simple. You would just have to say 19,000 times 14 over 100, because 100 is excluding VAT, whereas 114 is including VAT. That gives you 1,260. Your last transaction, VAT on discount received from suppliers. Total discount received amounted to 33,630. So let us quickly talk about this transaction. When you receive discount, that means there's a portion that you will never pay your suppliers. Therefore, the VAT on this will also be less. So your suppliers gave you a discount of 33,630. That amount, just like your debtors, is including VAT. So your suppliers are telling you you're not going to pay your amount. As a rule of thumb, most of the time, the amount of that you receive from your suppliers, or rather the amount that you pay to your suppliers and the amount that you receive from your customers, is always including VAT. And therefore, in this case, we've got what you want. I want the 14%. I want to know what the VAT amount is. What do I have? I have an amount including VAT. That gives me a total of 4,130. Okay, so now that you've completed what the amounts should be for calculating your output and input VAT, your second step is always to determine if whether it's input or output. And I know also at this point many people try and remember when they're doing, oh, if they're doing bad debts, it's going to be this. If they're doing sales, it's going to be output. If they're purchasing stock, it's going to be input. And I don't think that's a good way to remember stuff, because you are going to forget if you try and just swat off stuff. So let us work through logic and see if we can determine the answers correctly. So number one, don't forget to put your balance down, right? Remind yourself in the exams, and I think when you get your exam paper, what you should do is make a little script note for yourself when you know you're going to be tested on that. And what you should do is you should always write down that output is when I pay. Output is when I'll be paying SARS, and it will only happen when I sell stuff. So when I sell something, I'm going to have to pay output VAT, and input VAT is VAT I claim from SARS, and it only happens when I purchase. So now you've got your balance. Your balance is amount owed by SARS on 1st July. So this is amount owed by SARS. So this is input because you're going to claim this amount, right? Because it's an amount that you owed by SARS and you're going to claim this. Therefore, it is an input VAT. Right now, we know that input VAT is the VAT that we claim, and therefore, because SARS owes us this amount, we will claim it back. The second one is sales. Now, when we sell something, that means we need to actually claim the VAT. Pay the VAT to SARS, right? So when you're going to pay the VAT to SARS, you're going to have 69,300, which is your VAT amount. Now that you're purchasing stock of 22,260, you're going to purchase the stock. So if you've purchased the stock, you paid already. Therefore, that means you're going to actually claim this amount from SARS because you actually paid somebody else already for the stock. So you're going to claim this amount from SARS. When you claim an amount from SARS, it's 22,260 under your input. Right? Stock returned by debtors. So now when debtors actually return stock, that means a sale had happened and you no longer have that sale because your debtor has now returned your stock. Therefore, the amount that you were supposed to claim from them under sales, you need to actually deduct it under stock returned by debtors because debtors are giving you stock. They're not going to pay you for that money. So how can you pay SARS VAT on money that you're never going to get from your debtor? So if you're not getting that money, you are going to receive that money, right? You're not getting the money from your customers, but you're going to actually claim it from SARS, and therefore you have an input of 2,100. Likewise, bad debts. So bad debts is when you've actually sold goods to SARS, you've sold your goods to customers and customers are not going to pay you back. If customers don't pay you back, how are you going to pay SARS the VAT? You can only pay SARS the VAT once you've received money from your customers, and therefore an amount of 4,200 is also under input VAT because you've actually not yet received that money. You will not receive that money, and that money was part of your sales. So in this part, in the total sales part, in your 69,300, that sale was part of those of the bad debts that you didn't get. Therefore, you need to deduct it, and you deduct it by putting it under your input column. Right, now you've got stock taken by the owner at cost price. So now, if you took stock at home for your personal use, that means if you look on this purchase of stock, we've had an input. We've claimed from SARS here, but we claim from SARS because we're telling SARS that we're going to be selling the stock, which is not the case. You took the stock from home, so you can't take the money on that. Also, you need to pay SARS because you took that stock from home and no longer being able to actually sell it. Because remember, if you had to sell the stock, you would have received money for it and you would have actually given SARS the VAT on it. Because you didn't sell the stock, you took it home, you're not going to get any money from it, so you actually can't claim from SARS as well. Right? Then VAT on discount received from suppliers. Now this one, as I previously explained in the previous slide, when you receive a discount, that means it's money you will never pay to your suppliers. If it's money you don't pay to your suppliers, means your cost price of the product decreased. If your cost price of the product decreased, you will also consequently pay less VAT. VAT is paid on your selling price, right? So when you purchase the stuff and it no longer cost 100 Rand but 50 Rand, you only paid VAT on 50 Rand. Therefore, you will see then that this will actually be an output VAT and you've actually ended up paying SARS. Right, now you will see that what I've done is I've totaled up both columns. One column says 74,690, one column says 55,760. Output VAT is VAT that you pay to SARS, so you have to pay SARS 74,000, and input you have to claim from SARS 55,000. The difference between the two is 18,000, which is payable to SARS. This basically, you can see that this was actually paid to SARS when you were actually purchasing stock or other circumstances. So you've already dealt with it and paid to SARS. Therefore, you don't need to pay the full 74,000. You're going to pay to SARS what you should have paid them, less what you've already paid, which is your 18,930. Also remember to make sure that you indicate whether it's a payable or a receivable, because you will surely get a mark for that. Okay, now looking at some theory questions. Tax evasion. So what is tax evasion? Tax evasion is when you actually deliberately don't declare something to SARS which you should have, right? And that can be by means of incomplete, wrong documents, or incorrect readings, or you just deliberately chose not to show something to SARS, say for example sales. Right, and there can be severe punishments for it, and tax evasion is a big no. That's something you do not do. Always make sure that your tax is correctly declared to SARS. In this example, we had Nomvalo has ordered goods with a marked price of 35,000 from Bata Suppliers. The sale director of Bata Suppliers has offered to sell these goods to Nomvalo for 15,000, provided they do not have to issue an invoice. Comment on the offer they made by Jim. State 2 points. So firstly, in this question, you are asked to comment on the offer. So you need to determine whether it is correct or not correct. No, it's completely wrong. It's completely illegal for us to do that. And that's the one thing you have to mention. So you have to make a decision about it. Now, why is it wrong? So obviously, by doing that, you are evading tax from SARS, because if there is not a valid tax invoice, they don't have to pay SARS the money over. And you will not also be able to claim VAT, and that is obviously fraudulent, and it's unethical, and obviously it can cause business reputation to be damaged. And that is the things that you're supposed to be thinking about when you answer a VAT ethical question. Whether it's legal or not, it's very, very likely that the answer will be it is illegal to do that, it is wrong to do that, it is illegal or unethical to do that. And it's very important to have all documentations in place so that you can also claim. And also, SARS may have other ways of finding out. If they do find out, you will receive a penalty and your business reputation will be damaged. That's all for today, guys. Thank you so much for watching. Hope you guys have learned. If you still have any questions, please feel free to drop me a mail, subscribe to our YouTube channel, follow us on Instagram, feel free to ask questions in the WhatsApp group, and most importantly, please share this initiative with all your family and friends so that everybody can benefit. Thank you once again so much for listening. Until next time, bye-bye.